Hello everyone, my name is Anjani Kumar Khetan. I am based out of Bangalore, and in this particular video, we will look at how an holder of cryptocurrency can potentially account for those cryptocurrencies under IFRS and Ind AS. Now, before we get into the accounting per se, it is very important for us to understand some of the basics of cryptocurrency. What are the key attributes and features? Because all of those will eventually determine what the accounting we need to do for such cryptocurrencies. So what cryptocurrency is? If you look at a very generic level, cryptocurrencies, basically they are the digital or virtual tokens or coins like what we have Bitcoin or Ethereum. These digital or virtual tokens or the coins, they are based on blockchain technology. And unlike what most of the legal tenders are issued by the central governments and the various jurisdictions or the countries, these cryptocurrencies are not issued by any jurisdictional authority, thereby meaning that they operate independent of the central banks of the respective country. However, these cryptocurrencies are intended to function as a medium of exchange. We will see whether that is something which is happening in today's world or not. But of course, cryptocurrencies are intended to function as a medium of exchange. Then, these cryptocurrencies use cryptography for various purposes which are listed here. So, cryptography is used to maintain the security, also to control the creation of additional currency units, or to verify the transfer of cryptocurrency from one party to another, and to prevent fraud in the entire process. Basically, if you look at cryptography is the technology which describes the process by which codes are written or generated, which allow information to be kept in a secret way. Now, these cryptocurrencies are basically recorded on a distributed ledger and use decentralized control. So unlike traditional form of money, say for example dollar or the rupee, which are controlled using the centralized banking system, for example in India by Reserve Bank of India, unlike that, they are not controlled by any specific agency, and the decentralized control which is sought to be accomplished for these cryptocurrencies is achieved by using what is called blockchain technology. Now, quickly we can see what this blockchain technology is all about. If you look at on the right hand side, the blockchain technology or the distributed ledger technology, because these cryptocurrencies are held and recorded on a distributed ledger. So this technology facilitates the transfer of those digital and the cryptographic assets. And this technology is basically is the process wherein a digital and decentralized ledger, say for example, a public transaction database which has access to multiple parties, right? That keeps and records all the transactions which takes place on a peer-to-peer basis between various participants, right? And the key advantage of this blockchain technology is that two parties can transact with each other directly without the involvement or intervention, of an intermediary, and this basically results in saving of time and cost. Now, if this is too many technical thing, but from a typical accountant's perspective, what we need to be aware of is these are the basic things about the cryptocurrencies, that they are digital or virtual, they are not held in physical form, there is no central regulation, no specific jurisdiction which exercises authority, and the use cryptography and the use of blockchain technology in the entire process is something which we should be aware of. Now, as you may be aware that Bitcoin was the first decentralized cryptocurrency. So basically the first cryptocurrency which came into being was Bitcoin. However, over a period of time, lot of cryptocurrencies have actually emerged. Now, one of the recent estimates suggest that as of now, there are more than 1,600 digital currencies called cryptocurrencies which are currently in existence. For example, Ethereum, Ether, or Litecoin, and so there are many variants of the cryptocurrency. This cryptocurrency is a generic name when you have features like this which are there in a particular case. This is the way you have to understand what cryptocurrency is all about. Again, as I said, from an accountant perspective, this may sound very, very kind of a technical, but we should basically understand what this cryptocurrency is. And also, it is important to understand what are the key features. Some of these is listed here, but let us see the features, because if we understand what are the features of cryptocurrency, that will help us determine what should be the correct accounting, and also who are the participants in such a crypto transaction. So first of all, let us see some of the key features and attributes of cryptocurrency, because without understanding and appreciating these features and attributes, accounting will be something which will be very difficult to appreciate. So first thing first, if you look at these cryptocurrency, as I said, they are intended to function as a medium of exchange, thereby meaning that these cryptocurrencies are intended to be used in exchange for goods or services. So for example, if you buy, let us say, a Tesla car, okay, can you make the payment through Bitcoin? Potentially, yes, you can. So they are intended to function as a medium of exchange. That means you pay the cryptocurrency, say Bitcoin, and then in exchange of that, you may get goods or services. That's the intention. However, that intention is there, but if you look at these cryptocurrencies are not widely accepted still as a medium of exchange. Not that any and every counterparty will be willing to accept cryptocurrency like Bitcoin, okay, as the basis for or the medium of exchange for goods and services. That means, let's say if you have dollars or if you have rupee, you can use that currency to buy goods and services. But if you have Bitcoin, it is not necessary that all counterparty will be able to accept those Bitcoins or the cryptocurrencies. And another feature we need to be aware that they are not used, the Bitcoin or the cryptocurrency, they are not used as a monetary unit in setting the price for goods and services. So take the same example of Tesla. So if Tesla is being sold at, simplistically I'm saying, let's say 400K. Okay. Now, the pricing of Tesla is always in dollar terms, not in Bitcoins, in terms of Bitcoin. Yes, you may convert this into Bitcoin to say, if Tesla accepts the payment by way of Bitcoin or the cryptocurrency, they will eventually convert this $400,000 into the equivalent Bitcoin. Therefore, if you look at it in that sense, the cryptocurrency of Bitcoin is not used as a monetary unit in pricing the goods or services. Pricing of goods or services is still in the jurisdictional currency, dollar in my example, for pricing Tesla. And these cryptocurrencies, they are not used as a measurement basis in preparing the financial statement. So at least I have not come across any financial statement which have been prepared where the currency used is Bitcoin and not the jurisdictional currency. Let's say the functional currency of that particular jurisdiction in which the entity operates. Now, generally, cryptocurrency is also not contractual. We will see this in our next video, but the consensus is that cryptocurrency like Bitcoins and all, they are not contractual because in most circumstances, there are no contract in the strict sense that exists in these cases. Some of the other things which you should be aware, okay, that cryptocurrencies also include coins, okay, but the difference is that they are not physical coins; they are basically digital in nature. So cryptocurrency also include coins, but those coins are digital in nature, not physical, and one cannot withdraw a cryptocurrency. That means, like say, if you go to the bank and want to withdraw 1 lakh rupee or $1 lakh, yes, you can do that. But but when it comes to cryptocurrency, you cannot withdraw cryptocurrency. Rather, you can only transfer a cryptocurrency or a coin or a portion of it, okay, to another party. But you can't physically withdraw it because it's all virtual currency. Likewise, cryptocurrencies are usually divisible into smaller units. So, for example, if let's say rupee can be divided into paise, dollar can be divided into cents. Likewise, cryptocurrencies are also divisible into smaller units. Okay, for example, Bitcoin is divisible up to 8 decimal places, and each fraction is called Satoshi. So basically, if you look at, this is the way you need to look at basically 8 decimals is up to 8 decimals is that Bitcoin is denominated and it is divisible. The only evidence for crypto currency of the evidence of holding it or of the ownership is the record of the cryptocurrency transaction in the blockchain technology, which we talked about. Okay, but there is nothing else beyond that. You can't hold it, touch it in the physical or sense. These are some of the attributes which we should be aware of what cryptocurrencies are all about. Now, what are the key players? Who are the participants in the crypto market? Let us see, because that is also important for us to understand who all participates in the crypto market. So this chart tells you basically there are 5 categories of the players in the crypto market. Of course, goes without saying, the first one is your buyers and sellers. Now, who are these guys? Buyers and sellers, they are those parties who are holding or transacting using the digital assets. So Bitcoin or Ethereum. So basically they are somebody is buying, somebody is selling. They are the buyers and sellers in that market. Then you have issuers. Now, who are these issuers? Issuers of these cryptocurrencies, these are those entities which actually create those virtual digital assets like cryptocurrencies, the stable coins or utility tokens. And these are those entities, they sell or distribute them to third parties through mechanisms like initial coin offering or airdrops. So these issuers are the entities who create these digital assets. And they are the programmers basically who define the currency which they are developing, the digital asset which is there. So they are the programmers who define the tokens. What is the purpose? What is the role and the features and the coding language and the platform which is used for those currencies, cryptocurrencies? They are the issuers. Now then you have exchange platforms. Now what are those exchange platforms? These are those entities which facilitate the exchange of these between buyers and sellers. So these are the entities. They include digital asset exchanges, broker dealers, and custodians. Now they are kind of an overlap. You will also have custodians. And who are these custodians? The custodians, they are responsible for safekeeping, because all virtual currency. So they are responsible for safekeeping of the tokens and the coins through the high security computer hardware and software. And as I said, that these exchanges often also act as custodians or the wallets for both the sides, the buyers and the sellers. And of course, last but not the least, you have the miners. Who are these miners? They are the service providers which offer the computing power to validate and confirm the transactions between the wallets, and they maintain the distributed ledger. When we talked about the decentralized ledgers, they are the one who maintain it. So these are the entities that they include the validators, the payment service providers, the platform providers, and the digital wallet providers. Okay. Now, having understood, for many of the accountants, this may seem like a Latin and Greek, and so does it for me as well, to be very honest with you. But then, these are some of those basic things which we need to understand, because accounting we all understand. Okay. So unless and until we understand some of these basic stuff regarding the cryptocurrencies, it will be very difficult for us to really appreciate what the accounting one need to follow if one is holding those cryptocurrencies. So now let us see in the next slide, what is the possible accounting? having understood these features, what is the possible accounting which is there for cryptocurrency, or what one can potentially apply if you are holding the cryptocurrency. So possible accounting for holders of cryptocurrencies. Let us see this. Now, one thing which we should be aware of at the very outset, that currently there is no specific standard both under Ind AS and IFRS that provides a detailed guidance, okay, on the accounting treatment of cryptocurrencies. However, there is a IFRS Interpretations Committee in June 2019. They have looked at the possible accounting for the holders of cryptocurrencies, and they have given some guidance. And they have kind of concluded that based on the situation prevailing at that time in June 2019, what they believe should be the accounting for cryptocurrencies held by the holder, by the people who are holding those cryptocurrency. So we will leverage when we are detailing these entire possible accounting, we will also touch upon what those the IFRS Interpretation Committee have given the guidance. But it is important for us to understand that there is no detailed exhaustive guidance other than what I just spoke about, the Interpretations Committee's June 2019 interpretation. That is the only piece of authoritative literature which is available under IFRS, and because India and Ind AS also follows kind of the base literature is IFRS, so we can also leverage the guidance which the Interpretations Committee have given from an IFRS perspective. So therefore, as I said, because there is no detailed guidance, even prior to that Interpretations Committee's guidance, because there is no specific guidance other than what the Interpretations Committee has given, because of which entities were interpreting and applying the existing accounting literature, okay, in the way they thought it appropriate, because there is no detailed guidance. And therefore, because everybody was interpreting things in its own way, therefore, that historically led to diverse accounting practices. And that was precisely the reason why the Interpretations Committee looked at that in June 2019 and came out with some guidance in terms of how the holders of cryptocurrencies should account for it, or at least what is the nature or potentially what alternatives are available, okay, for accounting by the holders of cryptocurrencies. We will see that as we go along in this video, as well as we will continue our discussion in the next video as well, because it is a slightly long topic, so we may not be able to cover in a particular in one particular video. So if you look at, okay, what can be possible accounting which a holder of cryptocurrency can potentially apply? Is it a cash for a cryptocurrency? Is it the holder who is holding the cryptocurrency? Can you say that cryptocurrency is like a cash? Or is it a cash equivalent? Or is it something which is a property, plant and equipment? Or an investment property? Or a exploration or evaluation asset? Right? Whether it falls under that kind of, because we are talking about mining for the cryptocurrency. Is it like an exploration and evaluation asset? Or is it a financial asset measured at fair value through P&L, which is covered under financial instruments standard? Or is it an inventory under Ind AS 102? Or is it an intangible asset? Now these are the possible options when somebody is trying to first time applying the mind to determine what should be or what could be the possible accounting for the holders of the cryptocurrency. These are some of the options which comes to the mind. Can you fit into any of these accounting requirement? So we will look at each one of them. In today's video, we will restrict it to these two, and then eventually in subsequent videos we will go into each one of them and deep dive, and then finally conclude what is the correct way of interpretation, or at least what is the current the largely held view of how a holder of cryptocurrency should account for those cryptocurrencies. So we will look at these two aspects in today's video, but we will progressively pick up the other pieces as well. So let us first look at whether cryptocurrency is a cash. Now, if you look at, you would be aware, okay, we have to look at when we say cash, What is cash under IFRS and Ind AS? For that, we have to necessarily look at the guidance in the cash flow statement of cash flow. That is standard dealt with under IAS 7 under IFRS perspective and Ind AS 7 from an Ind AS perspective. Now, what this standard says. So, in the context of these accounting literature, both these Ind AS 7 and IAS 7, they do not give a very definitive, precise definition of cash. They don't give it. But what these two standard tells you is this. These two standard tells you that cash comprises of not only cash in hand, but also demand deposit. So, it is like the definition is given in this way, not that what cash is. It says cash consists of cash on hand, one category, and demand deposit. These are the two, I would say, subsets of what cash is as contemplated under Ind AS 7 and IAS 7. Now, cash in hand could be your coins, can be your currency notes. And demand deposit is something which, say, keep in mind, this is not time deposit, not fixed deposit, only the demand deposit. What is demand deposit? By the very definition, these are those deposits. So let's say if you have put these deposits into a bank, you are free to take out the money on demand whenever you need it. That's the reason why it is called demand deposit. Unlike that, your fixed deposit and time deposit, they have a specific tenure. So if you have given a deposit for 365 days, typically they have a lock-in in the sense that they are expected to remain with the bank, in my example, for 365 days. And then you get back your money along with the interest. But of course, there are flexibilities which the banks give. But the difference between the time deposit and the demand deposit need to be understood. The demand deposit are the only thing which is within the definition of cash. The deposit are not covered within the definition of cash as contemplated under Ind AS 7 and IAS 7. This you should be aware of. So, what is cash? This is how. So, cash is cash on hand or demand deposit. This is what you have to interpret this. Now, you also have to look at the financial instruments related standard IAS 32 and Ind AS 32. Now, if you look at the application guidance number 3 of IAS 32, now this application guidance of IAS 32, it says that cash or the currency which you have, this cash or currency is considered as a financial asset. Only the cash and the currency under IAS 32 application guidance 3 is considered as a financial asset. Because, why? Because it represents the medium of exchange. This cash or the currency, they represents the medium of exchange. Because, as I told you, medium of exchange means cash is expected to be used in exchange for goods and services. So if you carry your cash or your currency notes and you want to buy something in the market, you can always do it. It's a legal tender. So you pay the cash or the note and buy goods or services. So that is the reason why under Ind AS 32 and IAS 32, these currency or cash is considered as a financial asset because it represents the medium of exchange, and therefore this is also the basis. The currency is also the basis on which all transactions are measured and recognized in the financial statements. As I alluded to earlier in the last slide, financial statements are prepared in the functional currency, which is nothing but the currency of the primary economic environment under Ind AS 21 and IAS 21. Right? So this is how you have to look at what cash is. Now, also, if you look at the same Ind AS 32 and IAS 32, they also explain that a demand deposit gives the depositor a right to obtain the cash from the institution. So, for example, if this demand deposit, you have deposited, let's say, with HDFC Bank. Now, if it's a demand deposit, this deposit, you as a depositor, you have the right to obtain the cash on demand from the institution. SDFC in my example, right? So cash is basically is defined in this way. Therefore, if you summarize what cash is from the perspective of IAS, IFRS and Ind AS, the cash as the expression will entail two things: either the notes or the coins, or the right to obtain the notes and coins on account of these demand deposits. So basically, if you have demand deposit, you have the right to obtain the notes and the coins. This is the way cash is defined under Ind AS and IFRS. Now we need to test whether cryptocurrency stand the test of this cash. Does it meet the test of cash given on the right hand side of the slide? Whether cryptocurrency meet these characteristics or definition of cash. Let's see this. Now, as I mentioned earlier, as a form of digital money, of course, the Bitcoin and cryptocurrency, they are expected that to be accounted for as cash. They are expected. But the problem is these cryptocurrencies, they are not backed by, as I gave the features. That's why I said it is important to understand the features of this cryptocurrency. These cryptocurrencies are not backed by any central government or any government of any particular country. So none of the government nor any central bank is basically controlling these cryptocurrencies. And therefore, though they are expected to be, reckoned like a cash, they are also not a legal tender. Unlike, as I said, if you use this and go to the market to buy some goods and services, it's a legal tender. Nobody can refuse it. You can exchange this money and cash for obtaining goods and services. But then, I also gave you an example of Tesla. Now, if Tesla accepts Bitcoin as the basis of payment for buying the car, but then there may be hundreds of other companies or the organizations or the entities, they may not be accepting Bitcoin. So as a holder of Bitcoin or a cryptocurrency, you can't force them to accept those because they are not legal tender. And therefore, these cryptocurrencies and Bitcoins, they are not considered as legal tender in virtually all jurisdictions. Of course, we need to watch out for the developments because things are evolving very fast. You really don't know if something changes and if any particular country allows those like a quasi-legal tender. Okay, that's why as we speak, at least generally it is a widely held view that they are not basically like a legal tender. Now, if you look at all of that, what will you summarize? That no, they are not cash because these cryptocurrencies, they do not possess the properties and the characteristics of cash and currency. We have seen this. The characteristics of cash and currency is outlined in these two standards, IAS 7 and IAS 32 from the IFRS perspective, and Ind AS 7 corresponding Ind AS 32, these two under the Ind AS framework. So these attributes are not possessed by cryptocurrency and Bitcoin. And therefore, in view of these, it is clear that cryptocurrencies cannot be considered equivalent to cash because they cannot be readily exchanged for any goods or services. At least you can't force it. If somebody accepts like Tesla, that's fine. But you can't force anybody to accept it because it is no longer a legal tender. And that's what, if you see at the bottom 2 points, which we are saying, that even though cryptocurrency might be accepted to settle some transactions, like as I gave the example of Tesla, but currently they are not directly used for setting the price of goods and services in an economy. So as I said, Tesla is priced in the dollar terms. When you are trying to make the payment for Tesla in Bitcoin, this amount denominated in dollar is converted into the equivalent Bitcoin. Therefore, the pricing is in the underlying dollar terms, not in the Bitcoin terms. Likewise, if you look at the last point, the holder of the cryptocurrency just holds a key. We have seen this is all virtual. You as a holder, you just hold a key, to an address in the blockchain technology which you have. That can be used to facilitate peer-to-peer exchange, but no cash withdrawal can happen. Although it is possible to cover a cryptocurrency, you can convert it into cryptocurrency into cash if the holder have the right to receive cash. So for example, if there are people who can give you the in cash, it is possible in theory, but there is no contractual right which you have. Okay, so that is the way you have to interpret that, considering the attributes and the features of what cash or currency is as contemplated under your statement of cash flow standard and the financial instrument Ind AS 32 or IAS 32. Considering all of that, these cryptocurrencies do not meet the definition of cash. And as I mentioned, same way, the IFRS Interpretations Committee have also concluded exactly the same way that these cryptocurrencies, at least as of now, they do not meet the test of being classified as cash. Now, the next logical question is, okay, if not cash, can you call it as cash equivalent? Now, let us see, can they be called as cash equivalent? Now, before again concluding whether it can be or it cannot, first of all, we need to understand what cash equivalent is in the context of IFRS and Ind AS, what they are. So, if you look at, again, Ind AS 7 and IAS 7, the statement of cash flows, this standard defines what is the meaning of cash equivalent. So, and also in general, it is being considered that cash equivalents, they are considered as those instruments which are almost as good as cash. It is like you are holding like a cash, because they are cash-like in nature. It's like holding cash. For example, treasury bills. These are all government-backed. They are issued by the government, various governments involved. Money market mutual funds. Now, of course, one can argue that in the Indian context, we have had cases where even the liquid funds in India have temporarily, and in some particular AMC's cases, they have given the negative return. But in general, if you look at these money market mutual funds, by the very nature, they are very kind of a very, very short period tenured funds, and therefore, generally, money market mutual funds are considered like a cash equivalent. Same way, short-term government bonds. Because the reason is because all of these instruments are likely to meet the definition of cash equivalent as given in paragraph 6. So if you look at paragraph 6 of these two standards, Ind AS 7 and IAS 7, these actually define what cash equivalent is. So cash equivalent is defined in this paragraph as short-term, highly liquid investment, which is readily convertible into the known amounts of cash. So these are the attributes of a cash equivalent. First, cash equivalent by very definition has to be short-term. So these treasury bills, this money market mutual fund, and these short-term, government bonds, these typically should be short-term. They should be highly liquid. If you want to encash them, they should be readily available, right? And the cash should be you should be able to get it. They should be readily convertible, and most importantly, is not just you have to convert it into cash. When you convert those instruments into cash, they should be in the known amounts of cash with insignificant risk of change in values. So it should not happen that you lose principal in these cases. This is the way cash equivalent is defined in paragraph 6. Now, if you look at this attribute or the definition of cash equivalent, now we need to judge and determine whether Bitcoin or cryptocurrency, can it be called cash equivalent? Let us see on the right hand side. Now, considering this definition, again, cryptocurrency cannot be classified as cash equivalent. Why so? Because they are not convertible to known amounts of cash. You may get cash if somebody is willing to give you cash in place of or in exchange of those. But they are not convertible into the known amounts of cash, nor they are subject to insignificant risk of value changes. Let's see this chart. This is how the history of Bitcoin's price movement is. You can see what the flip-flop is. So price is widely fluctuating. This is, I've taken the source I've given here. This is the price movement from January 2009 to 2025. That's how the Bitcoin price movement is. So clearly, they do not meet the definition of cash equivalent because there is wide fluctuation in the values, and if they cannot be, even if they are convertible or converted into cash, known amount of cash is not there. And therefore, even this test fails. Therefore, cryptocurrencies or like Bitcoin cannot be classified as cash equivalent as well, because they are subject to considerable amount of price volatility, as is depicted in the chart alongside. Now, I'll take a pause, and perhaps we will pick up the other possible classifications, okay, in subsequent video, just to ensure that this video is not too long. Okay, we have already covered. So what we have covered is just two possible classification. Can it be classified as cash or cash equivalent? Both the answers are no, for the reasons we just discussed. And both these are also exactly in line with the interpretations committees under IFRS. They have also concluded exactly in the same way that cash and cash equivalent, the Bitcoins do not meet both these criteria. So we'll continue our discussion in the next week as well, and try concluding this in the next week. And if not, perhaps we will have the third video also, because I also want to give it to you what are the disclosure requirements with respect to this cryptocurrencies, and do we have in public domain some illustrative financial statements where Bitcoins have actually been accounted for. So considering all of these, maybe it will be slightly a long video, so I'll try to cover in maybe 2 more videos the entire discussion on accounting for cryptocurrencies. And as I discussed on the last video as well, these are all the kind of a QR code for various types of videos which you can see on my channel, which can be useful, and you can make use of it as you deem appropriate. So this is what I wanted to cover for this particular video. This is the link of my YouTube channel, and this is the link of my LinkedIn page. Please connect with me, put your comments, give some thought process in terms of in case you want any specific area or the topic to be covered, and I'll try my best to come out with those videos as well. I hope this is a very niche area. This is something which is evolving. I hope you like the deliberation on this, and we will continue to engage, and I'll take this forward in the next week as well. So that's what I wanted to cover. Take care. Bye for now. Thank you.